Well, shares of Carrier are got them up almost 5% this morning. This after the company reported its first quarter as a newly public entity, having been spun off from the old United Technologies not long ago. David Gitlin is the company's CEO, and he joins us now in an exclusive on CNBC. Very nice to have you this morning with us, David.
Thank you, David.
I want to start off on a theme that at least I'd referenced earlier in the show, and we see it from so many companies, which is cutting CapEx. You have done that as well, cutting CapEx by 40 to 50% and reducing it from your initial plan of, I think it was 350 million to 400 million. Just give me some sense as to why you made that decision and how you figure out what the right number is when you're thinking about cuts you can make.
Yeah, we believe in this environment, it's important to be very prudent. So when we looked at CapEx, we did, as you said, we reduced it from our initial plan of 350 to 400 down to 200 to 225. But keep in mind, typically we are at that 250 level. So we're almost commensurate with prior years. And what we decided is that we're going to cut everything that's discretionary, things like we were going to consolidate ERP systems around the world. We pushed some of that to the right. Frankly, we have a lot of investments we put aside for automation, and it's not the right climate to have industrial engineers in sites. So we pushed some of our automation projects to the right. They will come back. Our view is it's easier for an outfielder to run forward than backwards. So, as the year progresses and we see if the economic situation lightens up a bit, then we will pull some of the CapEx we push into next year, pull it back into this year. But we decided to be aggressive in this environment to preserve cash.
Right. 80% of your sales are in Europe and the U.S. One would expect that things are pretty tough right now, both in residential and throughout your other businesses. What are you seeing, and how much sort of transparency do you have in terms of what your business is going to look like a few months out?
Yeah, what we saw in the U.S. and Europe is orders for the U.S. were down about 5%, and orders in Europe were about 10%. So the crisis really started in China. It hit China very, very hard. China was very much a V-shape for us. It came down aggressively, but frankly, recovered very aggressively. China orders for us were down 50%, down 40% for the entire first quarter. But then when you fast forwarded in China, we were back at 2019 levels as we got into April. So a steep decline and a steep recovery. It feels to us like the decline in the U.S. and Europe will be shallower, but the recovery will be longer. So what we saw in April was that orders in the U.S. were down 25%. They were down 30% in April in Europe. And we are starting to see some areas within Europe show signs of recovery. Germany is starting to feel good. Italy and Spain are coming back. France is very slow recovery right there. 80% of the construction projects in France are still shut down. So it's going to be a mixed bag in Europe, and you're probably going to see some of the same in the U.S. with different states coming back online at different times. You're going to see a fairly jagged recovery, but hopefully as we get into the end of this quarter to next, we start to see those recoveries kick in.
Yeah, specific to housing, David, given it's an important part of what you do as the number one residential provider of HVAC, we saw housing starts drop dramatically. How much are you impacted by that? And again, what are your expectations on the residential market here in the U.S.?
Yeah, we believe new housing starts will be down about 10 to 20% this year. And, you look back in April, there were 3.8 million Americans that did not pay their mortgage. So you will see some deferral as we get through this year for new housing starts. When we look at our residential business in HVAC, actually 80% of our business is replacement. So when a system breaks, there is going to still be pent-up demand, especially if you hit some key heat waves in certain parts of the country. You are going to see some demand for that replacement cycle. We still believe that'll be down about 15% as well. But we believe that it's going to be a push out rather than an elimination of demand.
Right. Not to mention a lot of people are staying home more than they would typically. I guess they might be running their air conditioners in a more aggressive fashion than has been the case in the past.
Yeah, and I also believe that when they break and they're quarantined, they're going to certainly want to replace them.
Yeah, they are, without a doubt. You run factories around the world, assembly lines. I'm curious, David, how are you dealing with social distancing on an assembly line where somebody's putting together one of these kinds of systems? Is it an issue for you? or is it something you're able to deal with? And is it taking efficiency away from the business?
There's no doubt it's caused us some efficiency issues. If you picture a residential HVAC plant where we have a moving belt, often some of the technicians are shoulder to shoulder. So what we've done is we've gone to multi-shifts. We have distanced people. We've staggered them on either side of the belt. We put plexiglass in between the various technicians. I think ultimately what you're going to see is a combination between robotics and human interaction. So you probably, where you have people spaced out 3 feet and you want to get them spaced out 6 feet, probably the spacing in between, you're going to see, I think, a trend towards robotics overall, not to replace the human interaction, but to actually supplement it and work together. So we've managed it, I think, as aggressively as we can. But I would say the fixes we put in place to increase social distancing, I would describe as short term to make sure that we can keep our plants running. I think as we get through this pandemic, we're going to come out with more holistic, sustained approaches.
Interesting. And finally, speaking of the pandemic and impacts, or actually positive impacts it might have on your business, you know, there are a lot of buildings that may be looking to increase or upgrade their filtration systems. I can imagine restaurants, perhaps, that want to put a sign in the door that says, you know, our air is filtered all the time. Is that a real opportunity for Carrier?
Absolutely. I think Carrier will lead the way. As we transition what you would characterize as sick buildings to healthy buildings, a big piece of that will be ventilation. Part of it is exactly what you just said, is ventilate in the ventilation system. And one of the things we said on our earnings call is that we're putting the VBAC and HVAC with a real focus on ventilation. The filtration system, many of the filtration system in buildings around the world today cannot filter contaminants at a microscopic level, 0.1, 0.3 micron size. And we have electrostatic filtration systems for homes. We have UAV and other types of HEPA filters for buildings. So you're going to see a lot better filtration systems. Air changes per hour is a key metric that buildings look at for healthy buildings. The room I'm in right now, the air changes per hour in this room should be about 10. And many buildings around the world, whether it's universities or it's nursing homes or it's commercial buildings, don't have the right kind of frequent ventilation that you'd expect out of a building. Cleaning ductwork. Ducts ought to get cleaned every 3 to 5 years to avoid bacteria buildup or mold. And most buildings don't have the kind of frequency of duct cleanliness. So I think as you see the new normal come back and people go back into restaurants, back into commercial buildings, there's going to be a lot more attention on, am I in a healthy building? And what you're going to see is that companies like Carrier will step up and be part of the solution to create the healthy buildings that we expect.